Hello, Warriors. Fed Day. Is Jay Powell going to give the market more hopium? You know that the majority of participants are most likely looking for dovishness, and the key is going to be whether or not there's enough dovishness after yesterday's sell off in the NASDAQ for the NASDAQ to make a new high, which we're about 100 away. Actually, the S&P is acting better, closer to a new highs. It did not sell off as much. Should we make a new high in the S&Ps after the Fed above this 44, 23, 24 level up towards 44.40, it would be a short as well. I'm looking for a top in here, and it's very possible if the Fed does not bail out yesterday's break in NASDAQ, which, it's possible that we could have one more push up in the dollar. Dollar's trying to recover from this support level, and basically it's in no man's land. As I said, I think there's a chance that if we go up to this 93.50 level, 93.40, that's going to be a sell in the dollar. That should take the euro to new lows, most likely 100 pips underneath where we are now. And when I look at, and if we break and the euro rallies, we're about 140 pips away from where it would be a sell. So that's going to be equate to about 91.40 here in the dollar index. Cable's interesting because we're approaching major resistance in cable. It's led euro all the way up as expressed by euro pound on the verge of taking out a low that dates back all the way till April. So it's going to be interesting to see what cable does up around this 39.80 level. I would use strength in cable to be a seller and have a stop above this old 61.8 level above 41.02. Yen's a little bit two-sided right here. We had a nice sell-off yesterday, but coming back again fairly strong. And this is very tightly correlated to what's happening in rates. Rates came down a little bit yesterday, but it's my contention that last week on this day, that yields bottomed at this 113 level. And right now we're just consolidating this reversal. To me, it looks like downside for yields to um, continue to advance on any dovishness if the Fed gives it. I think 120 is your line in the sand here. We could pull back, just consolidating this first liftoff of almost 20 bips from 113 to almost 133. And then we start taking out these highs at 130. You're talking 145, 150. So I think what happened last week is key in yields. And if the yields continue to head up, it really doesn't spell anything good for gold. Here you see gold sitting at major support. And if gold follows silver, even though silver is up today, this is a bear flag that I've been talking about for several weeks. I've been bearish silver. If you go back through any of the past videos that we've posted here, I've been talking about the potential of a long-term bottom in silver not happening till we take out this low at the 2360 level. That still looks to be on course. And should we get a breakdown in gold under the support level, it measures back towards this 1740 level. This is about a $40 formation. So a breakdown from 98 is going to take into the 1750 range. And I think that we could most likely take that out, head towards 1720 before we stage another rally. So um, the metals are really underperforming, and these are the precious metals. I wanted to bring up something I don't talk about a lot, but it's been in a major bull market for quite some time and has not made new highs with the market for quite a while. And that's going to be the copper market. So I'm just looking for copper. I put it up near the metals. Okay. So here we are. I just want you to take a look at copper right here. So this was the last high that we made in copper going back to May. And we have a nice little neckline here for either forming a um, descending triangle or a head and shoulders top. We'll break down under 420, and this could be a right shoulder developing here. That would kind of make sense with what's happening if Powell is not dovish. Most commodity markets are under pressure. So we've had it in lumber giving back gains, and we've had it precious metals underperforming. So I'm expecting a correction in copper, not a new bear market, but a correction in copper that's going to take it to the three handle, maybe down here. I mean, you just take a measurement on copper from call it 384 to 480, take 100 out of it, we could trade back down to 320 would be the measured move on something like this. So pay attention to this as well. Copper could be rolling over. Oil has been very sticky and kind of going nowhere here in the last several days. I still think that there's at least, even if you're bullish crude, that you should wait for some type of correction off this recent bounce that we had. And 69 comes to mind. We'll see what happens down there. I would not be long the crude at this point. There were drawdowns, and so the drawdowns in energy are kind of balancing the Delta variant fears that are happening globally, more around the globe than here in the US, although we're spiking as well. Everyone knows I've been talking about buying breaks in the VIX. So we're almost at new all-time highs in the S&Ps, and we're way off last week's lows in the VIX. Getting back above 21 is going to be constructive. I think a lot's going to happen today with the Fed. This was kind of a um, horizontal ascending triangle that we had a false breakout under. But if you look at the VIX, to me, it looks like we have a three drive formation here that could be getting ready to be fulfilled, and that could take the VIX above the 28 level. What else do I want to cover? Because right now it's kind of, oh, look, I have over 50 pips here in, I posted this trade in our main chat, and I was short from this 151.20 level. So let's see, 50.27. So you have 62 pips here before the Fed. Take half. I'm going to post it in the chat room. So I advise people that are hearing my voice to join us here on our platform, because I do post, as well as Mike and many other traders post their ideas here. Come and hang out with us in our community. And last is 55, 53, so that's plus 74. Plus 74, and now what I'm going to do is I'm going to trail my stop to break even. So the worst thing that could happen to me now is I made money. So I've taken all the pressure out. I didn't, I'll take it. I didn't expect anything like this to happen until the Fed, but I'll take it. I'm not against luck. So that's setting up real nicely. The other day I did talk about Bitcoin, and I showed this wedge that we were breaking out of, and we've had a nice rally. Okay. And I'd be trading it right now, this rally, because we're right back at major resistance. And if we get risk off and Jay Powell comes off as a tough guy, you could see a pullback in Bitcoin too. I really think you're gonna, this was at least a short-term buy that worked out pretty well from the 32,000 level. You never go broke taking profits. I actually saw that there was a chance, in fact, there is, of a three drive to a top formation. Here's drive one in Bitcoin. It's confirming. This confirmed, and this high up here is not. So Not saying short it, but I'm saying take profits. If you were here, maybe you'll have a pullback to 34,000 or lower to take advantage of Bitcoin break. Trying to see if there's anything else I really want to cover into the Fed. You know, I normally don't trade in front of the Fed, but after yesterday's break in NASDAQ, I had to go with it. I'm not sure what news is breaking, but we're still heading lower. So I want to wish everyone good luck on the Fed today. The market's acting like maybe the Fed's not going to bail us out, and that's going to end up driving euro lower. What I'd like to see in the euro is it taking out the stops under this. It never really did. See this low right here, 1754.4, and this low was where is it? There it is, 1751.8. So we never cleaned out the sell stops under 117.50. So if we can get the euro under 117.50, it's going to head to about 116.80, challenge this low down here. And I'll be interested in a counter trend trade, just a counter trend trade, should that happen down there in the euro. Okay, so that I'm not going to take a position on. I couldn't help myself in NASDAQ because when I looked at this and I was talking to people I work with, if you look at the character of this 1 4-hour candle, look at this. Now look left. Do you see a range that can compare to it? Even during the last correction that we had down here before making new highs, when I thought the highs were in here and that we would get a failing rally. But look at this candle. It's huge, okay? You can't find this kind of range in NASDAQ for a while. So I felt that this changed the character of the market by the magnitude and the size of this candle. And so far, it's looking like it was right. And we'll see what happens here going into the Fed. But it's very possible that we're looking at a top. We did not make a new high in the S&Ps. S&Ps are fading as well. So I want to wish everyone good hunting on the Fed. Again, coming in and with booked profits on the NASDAQ short recommendation. Now it's 100 pips right here. Take it if you want it. You'll never go broke taking profits. Again, my view on currencies and the dollar is we're either going to rally one more time to 93.5. And if that happens, I'll be looking to buy cable most likely because of how much stronger it is. Maybe we get a break in cable to the 137 level while Euro's making new lows under 117. So those are my calls. The next one's yours. I'm going to have a great interview tomorrow with Michael Venezia, one of the best stock traders I've seen in a long time. People that know me from FX Street or from Forex Analytics know that I've been around a while, and Michael has a great head for curating lists and intelligence gathering on his own to execute stock trades. And if you want to know about trader psychology, you have to tune in tomorrow because a lot of people are emotional about their own capital. Most people prefer to trade their own capital. When you trade for someone else, there's emotions that are attached to it. If you trade for a bank, it's just a number. But if you know the client, that's one thing. But how about if the client is your boss? Tune in tomorrow for our weekly interview with Michael Venezia. Remember, don't just count your pips, count your blessings. Good luck today, everyone. Good hunting. It's okay to be wrong. It's not okay to stay wrong. Know where you're wrong before you get into the market, and also know what you're looking for if you're right. And that's a wrap for me today. Adios, everyone, and see you